IRS Form 433F is used by the IRS to evaluate your financial condition, usually for collection purposes. They want an accounting of your assets, liabilities, and income, but they will also want to see your bank accounts, pay stubs, titles, insurance, and proof of expenses. So, the Form 433F provides the framework for the supporting documentation the IRS will want to see. The Forms 433A or 433F are used by the IRS to analyze your individual financial situation for any number of reasons, usually for collections. There is another Form 433 OIC, which is used in conjunction when submitting an offer in compromise, but the basic same information is revealed by you no matter how it is to be used. Each of these forms is slightly different in appearance, but the same essential information is being requested by the IRS from you. The various Forms 433B are used by the IRS to analyze your business financial situation. The sum of this information is then carried over onto the Form 433A or 433F when considering your personal finances. Each line must be carefully considered and well supported. Be prepared to provide additional documents and evidence to the IRS. You must construct your evidence along with the Form 433F in order to make your case with the IRS. Your best chance of success is to construct the forms and the evidence as thoroughly as possible. The first page of the Form 433F appears like the example on your screen. The information requested in Section 1 of Form 433F is mostly self-explanatory. Your names should be as they appear on the last return you filed. If any information is different, use Form 8822 to correct the IRS records. The IRS usually wants the address for your personal residence, but P.O. boxes are not disallowed either. Write in your county of residence where indicated. The number of dependents you can claim is very important because it is used to determine your standard living expenses. The IRS looks at the number of dependents on your last year's return, despite the implication in the question that this year's information is acceptable. If you have extra dependents not included on last year's return, be prepared to prove with medical, school, or housing records that you are entitled to the deduction. If you or your spouse have self-employment income, the business information is listed here, and the income is added to the section entitled Other Income. The IRS may also request, or you may desire to supply, a Form 433B for this income. Place your Social Security numbers in the boxes. You may give the IRS your telephone numbers, and they will call you by any number you provide them. But because the IRS always confirms their determinations in writing, and your responses to them will usually be in writing, correspondence is the preferred method for making your case. You should feel free to call them for information, but make all requests and confirmations verified in writing. Here you list all your bank accounts, retirement accounts, stocks, bonds, or other deposit accounts. Be sure to list any loans against this property in the Living Expenses section of Form 433F. Here you'll place any investments you may have, whether they are taxable or not, and whether the money is being currently received from them or not. The IRS wants to know what 401ks you own, what pension plans you have, what IRAs, profit-sharing plans, mutual funds, stocks, and every form of investment account you have. Use extra sheets of paper if the space on the form isn't large enough. List any virtual currency you may have with such accounts as Bitcoin, Litecoin, Ripple, or even FTX. Get 3 months worth of statements to show the value. Disclose all real estate you own here. Check whether the property is your personal residence or not. The IRS is less likely to seize a personal residence, but they will ask you to take a loan against any equity you have in the property. The monthly payments will go into the living expenses section of Form 433F. Place the date of purchase and the purchase price for the real estate in the boxes. The amount of equity you have in your real estate is very important. The IRS might seize the asset or force you to get a loan against it. Usually, they do not seize personal residences. You will have to supply the IRS with all the documentation concerning any loans against the property, including your payments, so the amount of the loan will be verifiable. So, the current value is what determines the amount of equity in your property. This value is decreased by transaction costs. So, determine the fire sale value of your property and subtract the estimated real estate fees and closing costs. The IRS will often look at the final date of your mortgage payment and increase your payments to them by that amount. So, you'll have to call back and renegotiate. Disclose all other property here. Property is broadly defined to mean tangible property such as boats and RVs, and intangible property such as cash value whole life policies. Again, the IRS will look to collect from any equity in the property. Be prepared to prove any loans against the property. Also, the IRS will determine the final date of any loan payments and increase your payments to them by that amount on that date. Place all credit card information here: the type, the credit limit, the balance owed, and the minimum monthly payment. The IRS might ask you to pay the taxes with any credit you have, but they will often not allow the monthly payment as an expense in the living expenses section. In Section E1, you reveal who owes you money and how much. The IRS might try to levy against these accounts receivables. In Section E2, you disclose if you accept credit cards or not. If you accept credit cards, the IRS believes there might be an amount to be charged or another bank account for the payments. Here, list your current employer, how often you get paid, what your gross pay is, what taxes you pay, and how long you've been at this current employer. Most of this information will come from the 3 pay stubs you will be required to give the IRS attached to the Form 433F. Sometimes, only one spouse is responsible for the taxes, and the other spouse objects to revealing financial information. The IRS will likely want to know total household income, so be prepared to reveal this information if requested. But be sure to include all the expenses as well. Here you list the various types of monthly income you receive. First, distinguish alimony from any child support you receive. List only the amounts actually received. Next, show the net self-employment income you receive. After all expenses have been deducted from the gross, you may have to use Form 433B to accurately account for this self-employment income. Next, show all net rental income you receive after expenses. Next, disclose your unemployment income you receive, minus all the job hunting expenses you have incurred. Pension income is usually a set amount that rarely varies. Next, show any interest or dividends you receive per month. Obviously, if the amount of stock you own or your bank account is substantial, the IRS will look to the asset, separately disclosed, for collection. Social Security income is usually a fixed amount. Finally, list all other income and type you receive regularly. This is the most important section of the Form 433F. Here you list all your living expenses, which will be subtracted from your income to determine your collection potential. But the IRS will resist allowing you greater expenses than are allowed under their collection financial standards. Therefore, it is extremely important to compile as many expenses as possible to offset the IRS's limitation. Be prepared with grocery receipts to prove the amount you spend each month on food. The amount allowed by the IRS varies according to where you live and how many people are listed as dependents in your household. Once again, be prepared with receipts to prove the amount you spend each month for housekeeping supplies. There will likely be receipts from several different vendors. You may have to show credit card and other receipts to prove the amount you spend on clothing each month. The amount allowed by the IRS varies according to your vicinity, your job, and the number of dependents in your household. If you have a job that demands unusual or high-use clothing, make sure the IRS understands the increased amount you must spend on clothes. Personal care products and services are usually within grocery receipts you provide, but include haircuts, special care, or other personal products or services you must buy. The amount allowed for miscellaneous expenses cannot exceed the amount allowed under the IRS collection financial standards. Examples of allowable expenses include credit card payments, bank fees and charges, reading materials, and school supplies. Calculate the total food and personal care items and place the total here. For transportation, show, with all the receipts you can gather, the amount you spend each month on gas, insurance, licenses, parking, and vehicle maintenance. Include oil changes and receipts for regular maintenance. Public transportation may be proven with receipts from buses, trains, or taxis. For housing and utilities, show your rent with a copy of the lease or rental agreement and 3 months of cleared checks proving your payment for rent. Gather the last 3 months' worth of billings and payments for utilities such as electric, gas, water, and trash. Gather your last 3 months of billings and payments for telephone, cell phone, cable TV, and internet services. Here, list the real estate taxes you pay. If they are paid yearly, divide the total by 12 for a monthly total. List also the insurance you pay, annualized in the same manner. Be prepared with billings and payments to prove the amount you spend on house maintenance and repairs. Include special assessments for community property. Here, calculate and place the total for all housing and utilities. Prove the amount of health insurance you pay with your pay stubs if your plan is from your employer, or from the billings and payments and a copy of the declarations page of the health insurance policy if you are self-employed. Prove your out-of-pocket medical expenses by requesting your payment history from each of your medical providers and pharmacies. Prove copays and deductibles with the insurance company records and proof of your payments. Grocery and other receipts will show extra expenses such as crutches and skin treatments. Get proof of eyeglasses or dentists from the provider and your cleared payments. You can get proof of your child and dependent care directly from the provider as well as your cleared payments. Get extra expenses such as diapers and wipes from grocery receipts. Medical, education, and other expenses can be proven from the providers and your cleared payments. If you are self-employed, provide copies of any Forms 1040-ES you may have filed, as well as cleared payments for estimated taxes you have paid. Proof of term life insurance can come from your pay stubs if it comes from your employer, or from billings payments and a copy of the policy if purchased separate from your employer. If your employer requires you to contribute to any retirement plan, copy the section of your employee manual showing this requirement and highlight your pay stubs where the contributions are deducted. Here, place your regular contributions to retirement plans, 401ks, or IRAs. However, if the amount is excessive, the IRS may not allow it as an expense. Union dues are verifiable through your pay stubs or from the union hall. To prove delinquent state or local taxes, copy any notice from the state or municipal government showing the total balance or status of the account. If you have a payment plan with any government, copy the notice setting up the agreement and its provisions. Prove payments with cleared copies of checks or other payments. Copy any notices from the student loan lender showing the account balance and any payment arrangement. The lender may have a copy of payments you have made. Get copies of checks or other payments as proof. Copy the divorce decree or court order requiring the child support payments. Get copies of all checks or other payments proving child support for 3 months. Copy the divorce decree or other court order requiring the alimony payments. Get copies of canceled checks or other payments proving the amount. Copy any court order for restitution, fines, or fees or other court-ordered payments. Copy the last 3 months of cleared payments. Here, place all other reasonable expenses. Prove the amount with copies of billings and payments for the last 3 months. Sign the Form 433F and place the date of signature here. The Form 433F is primarily used for collection of tax debt. Therefore, you will be presenting the information requested in the form to an IRS collection officer who you will try to convince to accept your minimum payment per month. So, be prepared to present any evidence the IRS requests. Additionally, you may remember other expenses not previously considered by the IRS. Do not hesitate to present any evidence you feel is relevant. Payment plans with the IRS can be renegotiated at any time. So, if further or supplemental evidence comes forth, call the IRS and present them with the new evidence. Good luck, and please call J. David Hopkins at Tax Help if you have any problems at all.